BlackRock's coming out to show you who is daddy. And guess who's daddy? BlackRock is daddy. Larry Fink is your daddy. That's what happened today. Larry Fink sent a letter to all of the other ETF providers, and they opened this letter, and the header was BlackRock. And it said, "Dear Sir or Madam," for Kathy, "go fuck yourself. Best regards, Larry." Because Larry Fink has just announced that the fee for owning Bitcoin through BlackRock's ETF is going to be 0.2% for the first 6 months, or up to $5 billion, the first $5 billion into the fund. And then it's going to go up to what? 0.3%, which is 30% less than Fidelity, who came out with a battering ram last week. So this fee war, I've been talking about this for a while, and now it's actually happened. And now what's happened this morning, as I'm about to record this video, Grayscale comes out with 1.5%. So basically, Grayscale has made a mistake here, right? And I said this in a previous video. I think there's a chance that Grayscale could make a mistake here, and they've made a mistake. I think 1.5% is a mistake, but in this video, I'm going to talk about what the game plan I think that Grayscale is going through to allow them to be comfortable with a 1.5% fee, and we're going to cover that in a second. But first, I want to just go through very quickly all of the ETF options that are out there and their relative fees. So you got Grayscale. By the way, this is why you need to subscribe, because when you subscribe, it helps me spank the YouTube algorithm, and nothing in the world gets done without a good spank. So I want to help me spank the YouTube algorithm so it puts this content out in front of more people, because these people are not screwing around. They're here to actually play. They're here to actually take your wealth and your future. Who the fuck is disturbing British HODL talking? Hold on a second. Right, there we go. Right. So they're here to play. They're here not to screw around. They're here to actually take as much Bitcoin as they can from your mouth, from your children's mouth, and from your progeny's mouth. And they're going to go to any extent to do that, even to the point of lowering the fee to 0.2%, which I think is absolutely ridiculous. I thought this would happen maybe in the next cycle or the cycle after that, but no. Larry's here. Larry is here. And Larry wants your Bitcoin. So he's coming for your Bitcoin. And I'm proud of it. I'm here for Larry. I'm here for Larry. I'm here for Kathy. I'm here for Larry. I'm here for Michael. I'm here for all of them. I'm here for every single person that's filing for a Bitcoin ETF, because this is how competition creates better things in the market, right? I had this situation in the gold space where I was telling people, hey, you should probably use GLD at a 0.4% rather than paying a 4% premium to buy an ounce of gold from, you know, Mike Maloney or goldsilver.com or whoever the hell else you're buying it from, right? You should probably use the ETF to do it. And they would start attacking that message because, of course, I'm killing their business, right? Of course they're going to do it. Well, that's what's going to happen to Bitcoin companies. This is why I haven't taken a single sponsor from any Bitcoin-only companies, because these ETFs were coming. And I told you this, right? I haven't taken a single sponsor from any Bitcoin-only exchanges or companies because I wanted to see what would happen after this ETF pressure. If you have $1 million of Bitcoin, right? Well, let's say if you have anything under $1 million of Bitcoin, at this point, the multi-sig solution that I use from Casa, which costs $2,100 a year, is cheaper for you to use the ETF than the multi-sig solution. Think about that. Think about that, right? And it's much more simpler. You got so much less relative perceived risk from a user's perspective if you're under $1 million of Bitcoin. This is, it's phenomenal what's happening. And so anyway, the fees. Grayscale, 1.5%. ARK, 0% for the first 6 months or the first $1 billion, and then 0.25% after that. Blackrock, 0.2% for the first 6 months or the first $5 billion. And then 0.3% after that. Bitwise, 0% for the first 6 months or the first billion, and then 0.24% after that. VanEck, 0.25%. Wisdom Tree, 0.5%. Invesco and Galaxy, 0% for the first 6 months or the first 5 billion, and then 0.59% after that. Fidelity, 0.39%. Valkyrie, 0.8%. Hashdex, 0.9%. Franklin, 0.29%. These guys are here. These guys are here to play. right? And again, there's another video that I'm going to do soon, which is again why I want you to subscribe. It's about the idea of these ETFs lending out their Bitcoin under their management, and what the risks and details are around that, and whether they can do that or not. So please subscribe to the channel. That video is coming in the next few days. So basically, all of these ETFs have come out and they basically said, we're here to play now. We're not here to screw around. And Grayscale basically said, hey, I think that we're going to stick to 1.5%. Here's what I think has happened. Either they figured out that a lot of their, two options here. Either they figured out that a lot of their holders will incur a taxable event, and so therefore they can keep the fee at 1.5, or they're going to lower the fee a day before the trading begins, because none of this is fixed, right? They've all got waivers in there saying they can change their fees, and so a day before it starts trading, if we announce 1.5%, everyone starts talking about that. Oh my God, Grayscale! Oh my God, Grayscale! Oh my God, Grayscale! A day before we lower it to 0.5%, now everyone's like, oh, Grayscale, and then everyone sticks with Grayscale rather than actually immediately just lowering it down to the level that everyone else is at to compete. Because if Grayscale was like 1.5% and then you start planning to sell your Grayscale position on the day of launch, once the NAV goes to zero, or once the discount goes to zero, and then a day before launch, Grayscale comes out and says, hey, we're going to lower it down to 0.4. Yeah, okay, BlackRock's at 0.2, you're at 0.4. You're like, yeah, screw it. I'm not selling that and incurring that taxable event for whatever reason, right? So that could be the strategy. Or, and here's what I think is most likely, Grayscale's preparing itself for an acquisition. Then Grayscale's milking that 1.5%. They're going to prepare for themselves for an acquisition, and someone like BlackRock, Fidelity, someone else is talking to them about acquiring GBTC and rolling it into their Bitcoin spot ETF fund, and ultimately having the biggest fund in the game. So here's how I think we'll know. If a ton of capital does not fly from Grayscale to the BlackRock fund, and if they don't lower the fees on, a day before trading, then I think they're preparing for an acquisition. And the biggest holders of GBTC will have been told, don't do this, we're preparing for an acquisition, etc., etc. And so, don't cause any capital flight from GBTC. Ultimately, the capital flight doesn't really matter, because all it means is $1 billion is sold from one place and $1 billion is bought from another place. It will have some interim volatility because of the cash creates nature of the ETF, and the fact that Grayscale would actually have to sell the Bitcoin into the market, and then BlackRock would have to buy it. So it could create some volatility like that. But ultimately, I don't think there is going to be much. It's either a very bad move for being stupid, or it's a very, very intelligent move because they're keeping their fee high, they're making everyone worry, then they'll lower it down, or they're preparing for an acquisition, in which case there's no point lowering the fee because the acquisition will be announced soon enough. So that's what I think is going on. Ultimately, I told you this was going to happen. The fee wars have started. Everyone else is, out here worrying about whether they've all the life-changing things that Bitcoin's going to do. I tell you one thing, this ETF is going to make that El Salvador decision to adopt Bitcoin look like, a polished turd as far as the amount of capital that's going to come in. There's going to be more capital coming in from American ETFs than El Salvador's GDP, right? This is not a small thing that's happening here. If you think El Salvador is important, this should be 20 times more important to you than anything El Salvador has certainly done. The doom and gloom boomers are gonna go take another hike, and this is the evolution of this asset. And now these guys are here to really play, right? Honestly, this has surprised the shit out of me, because I thought it would have been next cycle that these fees would have been this low. But no, here we are. Bitcoin is always surprising people, including myself. So, again, I want to say, as I've been saying, since BlackRock filed for its application in Q4 of last year, that I said that the Bitcoin ETF will be coming in 2023, and it looks like I'm about to be proven right, because as I've said, you're not going to take away 8, 9, or 10 days from me. So that's going to be another thing I was right about. The Bitcoin ETF that will be approved in 2024, I will be right because I said it was going to be approved in 2023. And that's how the world works. Very few people understand how that works. And if you're someone who's getting triggered right now because it's 2024, but I said 2023, but I'm still right, put it in the comments. You clearly don't understand how reality works. I was right. It's just simple as that. So that's what's going on here. The games are here. BlackRock is here. They basically told everyone to go fuck themselves, and they're now here to really take this to the next level. I'm very, very excited. I'm very, very proud of all of these ETF providers that have managed to create all of these filings and all of this community and all of this noise around Bitcoin, and I can't wait for the $200 million of marketing that they'll be spending on Bitcoin over the next few years. And by the way, none of this accounts for the ancillary effects of it, right? Because if an ETF is approved in the USA, you never know what foreign sovereign wealth fund might decide, hey, we probably should get an allocation into Bitcoin now that the ETF has been approved. And so let's just put in a few $1 billion, because the ETF gets approved. So it's not just the ETF capital, it's all of the capital that revolves around it based on the direction of it, right? I'm sure there was many people who invested in gold because the GLD was approved and they wanted to hold the gold because they saw that GLD was going to take the price up. All of that is very, very important and matters. So, but ultimately, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.